As a first-time buyer, understanding how to achieve mortgage success can feel like a complex and overwhelming task. All the different mortgage products to understand, the mortgage application process, which mortgage lender to go to, and what mortgage documents you will need. In this video, I break down the process of preparing yourself for the best chance of mortgage success. Let's go. Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers as well as providing the best credit scoring and money saving tips. Let's get into the vid. So the first thing you may want to do as a first-time buyer is start looking for properties. However, this is one of the most common mistakes to make, as the property process can pull you in as you start feeling emotionally attached to properties and therefore make the decision to start looking at properties and placing offers without doing any preparation. Remember, preparation is the key to mortgage success as a first-time buyer. Let's have a look at the key areas of the whole property buying process that will make the difference and give you the best chance of mortgage success. The most important areas are 1. Understanding your budget. 2. Understanding the mortgage lenders available to you, high street or adverse. And 3. The mortgage application process. So let's start with your budget. Understanding the amount you can borrow and the purchase price you can go to is something you should know before kicking off your property search. Lenders now have affordability calculators you can use which are highly accurate and are the exact tools the mortgage underwriters will use when assessing your borrowing potential. So my advice is to use them, and if anyone wants me to do a video on using an affordability calculator, please let me know in the comments. If you want to do a manual calculation, times your salary by 4.5 and add on your deposit. If you have received a bonus for the last 2 years, you can use the bonus average over the last 2 years. Add that to your salary, and if you receive regular overtime, you can use 50% of this figure. You need to work out the average of the last 3 months. Finally, you need to deduct any annual credit commitments, childcare costs, maintenance payments, pension contributions, and student loan payments from your annual salary before you times the final figure by 4.5. For credit card balances, you would take 3% of this balance and times that figure by 12 and then deduct that from your annual income. For loan payments, you would times the monthly payment by 12 and deduct this figure from your income. You would do the same for childcare costs, maintenance, pension contributions and student loan payments. Some lenders do lend 5 times income or maybe 5.5 times income. Normally you'd need to be earning a certain salary such as $50,000 per year or to be contributing at least a 10% deposit and choosing a 5-year fixed rate. If you can make it fit with 4.5 times, then the pool of lenders available to you is going to be much greater. And if for whatever reason your first application is not successful, you will have another solid option. Where when you use the lenders with higher income multiples, if something went wrong, that could well be the end of the process for you and no other options to purchase the property you've fallen in love with. If your debt to income ratio is low, you will have a bigger chance of success with the higher income multiples. Here is an example. Sparks, can you take this one?
Okay, no problem, Alex. So let's say you have a £40,000 annual salary. This can be single or joint. You have a £20,000 deposit. You have a personal loan payment of £150 per month, a student loan payment of £20 per month, pension contributions of £25 per month, and a credit card balance of £1,000. Add those commitments together and you have $2,700 which will be deducted from the annual salary. So the final calculation will be 40,000 minus 2,700 times 4.5 plus the 20,000 deposit, which equals £187,850. This figure is the maximum purchase price of your budget. I hope this helps. Back over to you, Alex.
Thanks for that, Sparks. So you need to ensure you are putting down a minimum of 5% of the purchase price. In this example, $20,000 is just over 10%. By using an affordability calculator or at least doing this manual calculation first, this will give you a good insight if what you are looking to do is possible. I wouldn't rely on these methods for the exact to the penny figure, as there are other elements to consider. However, doing these calculations versus not doing these calculations at all is going to give you a much greater understanding of your situation and budget. 2. What mortgage lenders are applicable to me? So this question can be answered by looking at your credit files. When mortgage lenders decide whether they're going to lend to you, they will conduct an agreement in principle. To use a high street lender, your credit score needs to be almost perfect. If not, then you may need to use what I call secondary lenders, which are lenders off the high street that provide mortgages for people who have adverse credits, from minor to more serious. When mortgage lenders conduct your agreement in principle, they will tap into Experian, Equifax and Transunion credit agencies to make decisions. Some lenders will use one or the other, where other lenders may use a combination of the same agencies at the same time. Therefore, it is vital to use a multi-agency credit file where you can see all 3 credit files on one report. We recommend using checkmyfile for mortgage purposes, as this is currently by far the best multi-agency credit file you can obtain. The link is in the description below, where you can download your multi-agency credit file for free within 30 days and cancel at any time. Once you've downloaded your credit file, you will be clearly able to see if you have any missed payments, defaults, CCJs, IVAs, bankruptcies, missing data, incorrect addresses and voters roll history. This all comes into play when understanding if high street lenders or secondary lenders are applicable to your situation. For high street lenders, you must have an almost perfect credit score with no missed payments. You may get away with 1 or 2 missed payments in the last year or two, but that's about it. Maybe even a small default under £300 if satisfied could be considered. Anything worse than this, you're going to be looking at secondary lenders. I've done a whole video on how to assess your credit file. I will link it up in the cards now in the corner of the screen. 3. The mortgage application process. You need to ensure you have all the correct documents from the outset prior to submitting any mortgage application. If your ID is expired, the lender will not accept this and it could slow down your application. You need to ensure you have all of the relevant proof of income and proof of deposit, and that your name and address is correct across all documents. I recently did a video on all the documents you need and the way they should be presented for a mortgage application. I'll link it up in the cards in the corner of the screen and put the links in the show notes in the description below. If you can prepare correctly in the 3 areas we've discussed today, this will give you the maximum chance of mortgage success. Today's question: are you prepared for a mortgage application? Let me know in the comments. Finally, I want to finish off by letting you know about the service we are recommending to our clients in regards to utility bill management. Whether you're renting or a homeowner, getting the best energy deal, understanding when the deal ends before the rates shoot up, and having a way of easily switching services is really important for future mortgages, as it helps stay on top of payments, which can often lead to missed payments and declined mortgages. It's so easy to have a credit blip from a utility provider, as the communication and tools utility bill providers provide are often really poor. USwitch is a service which is similar to a mortgage broker service, where you can go online, type in your address and search all the best deals, with the ability to filter providers with options such as no early repayment charges, at the same time seeing the best rates. I've put the link in the description below, and I've also done a separate video on this service which I'll link up at the end of the video on the end screen. I fully recommend the USwitch service for switching your utilities and the ongoing management. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up repayments on your mortgage. Thank you for watching today's video. I hope it has provided you with some useful tips that will provide you with value. Please check out the show notes for a recap on today's video with access to any links discussed today. Please do consider subscribing and ringing the bell to receive further notifications when we release our videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. We will see you in the next video.